Hello students, welcome to AffairsCloud. My name is Shashmita. We have an app by the name Careers Cloud which you can go and download through the Play Store. Once you have downloaded the application, you will easily be able to log in using your Gmail ID. And once you have logged in, you will be redirected to this page where you will be getting this UI. And there will be option for home, all courses, my courses and doubt section in this application. You will be getting multiple PDFs, multiple content on daily basis that will be enhancing your learning. Under Crack Current Affairs, you will be able to see multiple options. First one is Current Affairs English. We upload the day-to-day basis news in the English format. And apart from English PDF, we also provide them in Hindi format. And this banking awareness, we upload a PDF every month. So this PDF will contain the banking news, banking and the finance news of that respective month. And Current Affairs Exam PDF will have two categories. One is that most important news of that particular month will be uploaded in this Current Affairs Exam PDF. And also Exam Perspective PDF will also be uploaded. And next is Special CA. This will contain Union Budget, Economic Survey, and also the most important events that had taken place globally as well as nationally. And next most important is topic wise. So the entire news of that particular month will be segregated into different topics. And in order to recollect whatever you've read, we also provide you with topic wise quizzes. Apart from that, we also provide state current affairs. Now, here if you see, we provide you with the day-to-day PDF, and this we provide you with the weekly PDF. So that particular week news will be compiled into a PDF and in question and answer format in English, and will be uploaded here. And to enhance your learning, you can also, to enhance and strengthen your learning, you can also attend the quiz. Here we provide you with the entire news of that particular week. But here we take the top 60 most important news and we upload it in this PDF in question and answer format. Apart from weekly, we also provide you the monthly ones. This PDF will contain detailed view of that particular month news, and this will have a brief format of the same news. This will be in the form of a question and answer format, and this will have the top 100 question and answer of that particular month. We also provide you with the PIB news on a day-to-day basis, which you can go and read in these particular tabs. Apart from that, we also provide the Union Budget and Economic Survey. You can also attend you can read after reading the PDF. You can also go and attend the quiz. This is available in the Special CA category. We also provide state level current affairs. So this will be very helpful for students who are preparing for state level exams. For example, if you are preparing for Tamil Nadu state level exams, then you can click this tab and you will be able to see all the current affairs or news related to Tamil Nadu. Apart from that, we also provide PDF from the exam perspective. Suppose you are preparing for RBI assistant mains, then this tab will contain 5 to 6 months of current affairs, which has high probability of being asked in RBI assistant mains. Similarly, for SBI PO, RRB PO, clerk mains, all these are being given under this section. And also we provide separate content-wise, topic-wise current affairs like national affairs, government schemes, international affairs, banking and finance, economy and businesses, MOUs, and committees and meetings. All these different types of news are segregated in these particular categories. Hello students, welcome to our new initiative. In this initiative, we will be uploading the weekly current affairs on banking and finance section. So this will be uploaded on every Monday. And so on the whole, per month, you will have totally 4 videos related to this topic. And apart from just providing you with the banking and finance news, we also provide you the conceptual explanation so that this will enhance and also strengthen your knowledge about these topics.
Today, we will be covering January 2nd week banking and finance awareness news. Moving to the first news. The first news is about the interest rate on the small savings scheme. The Ministry of Finance has released the interest rate for the small savings schemes, and it has been kept unchanged for the fourth quarter of the financial 25. So this is the straight fourth consecutive quarter that the interest rate have been unchanged for this small savings schemes. So this new interest rate will be applicable from 1st January to 31st March of 2025. So what are these small savings schemes? These are nothing but saving instruments. These are managed by Government of India to encourage citizens to save regularly, and also it is also one source of fund for the government. So it is a win-win situation where the Government of India earns a source of fund, and also the people also they save regularly. That habit is developed. The interest rate for the small savings schemes are notified on a quarterly basis by the Government of India. The methodology, so on what basis the interest rate is calculated, that methodology has been recommended by the Shyamala Gopinath committee. Remember this name, it's very important. If they ask you like who has recommended the method to calculate the small savings scheme interest rate, means it is Shyamala Gopinath committee. The interest rate, if you see, savings deposit 4.1%, 1 year post office time deposit 6.9%, 2 year is 7, 3 year is 7.1, 5 year is 7.5, and 5-year recurring post office recurring deposit is 6.7. Kisan Vikas Patra is 7.5%, very important. And also remember the maturity is 115 months. PPF is 7.1%, Sukanya Samriddhi is 8.2%, National Savings Certificate is 7.7%, Senior Citizen Savings Scheme is 8.2%, Post Office Monthly Income Scheme is 7.4%, and Mahila Samman Savings Certificate is 7.5%. Remember, so these interest rates are very important. So next, if you see, SBI had released a report on the rural poverty. So it had observed that the rural poverty ratio, it had for the first time in financial 24 declined below 5%. So it has, for the first time, it has dropped below 5% in financial 24, that is to 4.86%. That is a very good number. So previously, if you see, it was 7.2% in financial 23, and before that, a decade ago, it was 25.7% in 2011-12. From 25.7%, we have gone down to 4.8%. That is phenomenal. So what is the reason for this? The main reason is higher consumption. So the below 0 to 5% of the population have increased their consumption. That is the main reason for the drop in this poverty ratio, and also many initiatives supported by the government of India is also one of the reason for the decrease in this rural poverty. Remember the number, it is 4.86%. So you can use this data in your essays, and you can tell that the first time that the rural poverty ratio has dropped below 5% as per the SBI report. You can mention that, and you can mention that the reason is higher consumption and also government-led initiatives. Next is urban poverty ratio. So if you see this urban poverty ratio, it has also decreased marginally, not that much as rural poverty, but it has decreased to 4.09% in financial 24 from 4.6% in financial 23. So just a little bit has been reduced. And if you compare with a decade ago, it was 13.7%. So from 13.7%, it has decreased to 4.09% in financial 24. So how was this data calculated? So if you see, this data had been taken from the Household Consumption Expenditure Survey. The report has used the data of the latest annual Household Consumption Expenditure Survey for August to July 2024, which is released by the Ministry of Statistics and Program Implementation. Remember this also. They might ask you that what is the tenure of this Household Consumption Expenditure Survey. So for how many months? We know that's 12 months. So from which day, from which month to which month? It's not from January to December, or it's not the financial year. It is the August 2023 to July 2024. So this is different. So remember this. The data analyzed is for 1 year, but from August 2023 to July 2024, and this survey is released by the Ministry of Statistics and Program Implementation. So from this survey, this report was based on. So the report was based on this latest survey. The report, it has also estimated that the poverty line is 1623, that is rupees 1623 for the rural areas and 1944 for the urban areas in financial 24. Very, very important numbers. 1623 for the rural areas, 1944 for the urban areas. So if any person is earning lesser than 1623 per month in rural area, then he is considered to be living in poverty. Similarly, if any person in urban is earning less than 1944 per month, then he is considered to be living in the poverty line. So how is this? This has been calculated by adjusting the decadal inflation. So if you see, before 10 years, whatever was the poverty line, obviously in 10 years the prices would have raised. So it's very important to inculcate the inflation factor in calculating the poverty lines. So that has also been included, and also the imputation factor in the poverty line set by the Suresh Tendulkar committee in 2011. So let us learn a little bit about Suresh Tendulkar committee. So this committee, it was set up in 2005 for poverty estimation. So there were a lot of committees that were set up for poverty calculation. So how to calculate poverty, like that, a lot of committee had been set up, and Suresh Tendulkar committee is one among them. So Suresh Tendulkar committee, it had addressed the shortcoming of the previous methods used. So previously, if you see, it was calorie based method. Say suppose there is a calorie of 2400 in rural and urban 2100. So if any person consumes less than 2400 calories, then he is said to be living in poverty in rural area. Similarly, in urban area, if the person consumes less than 2100 calories, then he or she is said to be living in poverty. So this was the calorie was the basis on dividing whether the person is living in poverty or not. But now in this Tendulkar committee, it got shifted from calorie based. And also it made the poverty line broader by considering the monthly spending on health and education in addition to the nutritional requirements. So previously this health and education factor was not included in the poverty line calculation because it was assumed that it will be provided by the state. But later on it was decided that it is important to include this health and education as also a part of an important spending. So later this health and education was also included in the poverty line calculation. Next is very important, this use of mixed reference period. So previously it was a uniform reference period, that is for all kind of products same reference period of 365 days was used. But later on it was decided that for different types of products different reference period, different timeline should be used. So for clothing and footwear the period is 365 days, fuel and light it is 30 days, and edible oil and fish it is 7 days. So use of mixed reference period will give you a better poverty line calculation than using a uniform reference period. So that is what another change was made, and also uniform poverty line basket. Now what is this poverty line basket? It is nothing but the goods and services required to meet the basic human needs. That is what is the poverty line basket. Previously it was separate for the rural and urban. So it was then later decided that Suresh Tendulkar committee recommended that no, it should not be different, it should be uniform for both rural and urban. The last one is adjustment of prices for inflation. So inflation factor should also be considered in calculating the poverty line. So previously if you see in financial year 12 it was 816 in rural and in urban it was 1000 rupees. And now including all these factors, the inflation factor also, it is now in financial year 24 it is 1623 and 1944. Sorry, this is 1632, not 23, it is 32. So, I am telling it once again, for rural area the poverty line is 1632 and for the urban area it is 1944. Next is consumption inequality. So, this was also calculated part of this report. So, if you see this consumption equality, it decreased from 0.26 to 0.37 in rural area, and also for the urban area there was a reduction from 0.314 to 0.284. So, both rural and urban the consumption inequality decreased, which is a very good factor. And if you see the ratio of the difference of the rural and urban monthly per capita expenditure to the rural monthly per capita expenditure, it has also decreased from 71.2% to 69.7%. Though the decrease is little less, it is marginal, but it is also a good factor to include. So what is the main reason for this decrease? The reason is again the government-led initiatives like direct benefit transfer, investments in rural infrastructure, increase in farmer incomes. That is the main reason for this decrease in consumption inequality and also decrease in this ratio. So if you see the national savings rate, the average national savings rate was around 31%, and in high income states the savings rate was more than this 31%. But another negative thing is that the Uttar Pradesh and Bihar have the low savings rate due to the higher outward migration. So this is the one good thing to be looked on, but this is another negative thing. So the savings rate, the national average savings rate is around 31%, and high income are having a savings rate greater than this 31%. But Uttar Pradesh and Bihar, they have low savings rate due to this higher outward migration. The next news is RBI releases master direction on the credit information reporting. Now, what is this purpose of releasing the master direction? First is to establish a standardized framework for the reporting and dissemination of credit information. So, a lot of credit information is being reported by the credit institution to the credit information company. And also a lot of data is disseminated to the credit institution by the credit information company. So, there should be a standardized framework. It should be followed in order to avoid any chaos. So, that is one of the reasons. And also to ensure the confidentiality. If you see sensitive data are involved. So, the credit institution or the credit information company, they transfer sensitive data like Aadhaar, PAN, address, phone number. So, these are all very sensitive data of the customers. So, it should ensure the confidentiality and security of the sensitive credit data and address other related objectives. This is the main reason to release this master direction on the credit information reporting. So, if you see, let us see that Let us look into it in detail. So, when a credit institution accesses a credit information report of the customer, then the credit information company has to send SMS or email to the customers. A notification like has to be sent that the credit institution has accessed the credit report. But should it be sent always? No, it need not be sent always. It has to be sent only when the enquiry is reflected in the customer's credit information report. Say suppose a customer has gone to a bank, okay. He has asked for a loan, but it has been rejected for some reason. Again, he goes for another bank B, and again there also it gets rejected. And third, he goes to an NBFC, and then there the loan gets accepted. The NBFC provides loan to the customer. Okay, so for getting a loan, a 3 inquiry has been made on his CIBIL report. So sometimes all these 3 inquiry will not get reflected in the customer information report, that is in the CIBIL report. Maybe only this inquiry and this inquiry, or maybe just this inquiry may have been reflected in the customer's information report. In that case, it is enough to just inform about this inquiry to the customer. That is, if only say suppose only NBFC inquiry has been reflected in the customer's information report, then in that case only this NBFC inquiry should be informed to the customer via SMS or email. So not all credit information access should be reported to the customers. Only those inquiries which have been reflected in the customer information report has to be informed to the customer via SMS or email. Apart from that, another thing also has to be informed. When the credit institutions makes any report to the credit information company regarding the default or dues. So, if there is any default or dues on the loans that has been paid by the customers, then if the credit institution informs about this default or dues to the credit information company, at the same time simultaneously it has to inform about it to the customers as well, again via SMS or email. Remember, when there an inquiry is made and when it is reflected in the report, it has to be informed to the customer, and when a default or due has been reported to the credit information company, that also has to be informed to the customers. Next is that when a customer has requested a data correction to the credit institution. Say suppose a customer found out its CIBIL report, okay. He found out that the score is less, and he found out that he has been paying his due on a regular basis, that is he is paying his EMI on a regular basis, but in spite of that there has been a due reflecting on his information report and he finds it incorrect. I'm paying correctly, then there shouldn't be any due in my report, right? So there is some incorrection and I have to make this correction. So he goes and visits the credit institution from where he has taken the loan and provides a form for data correction. Now this data correction will be forwarded to the credit information company. But for some reason, if the credit information company rejects it, okay, maybe he thinks that no, this data correction is not valid and he is rejecting for any reason, and he forwards it to the credit institution, then the credit institution should not stop it here. He has to send the reason of the rejection to the customers, because the customer has come to the bank, has given data correction, right? So if it is being rejected by the credit information company, then the reason for rejection has to be informed to the customers by the credit institution. This is another thing. Next thing is that when the credit institution provides data to the credit information company to inject the data, then the credit information company has to inject the data within 10 plus 5 calendar days. Okay. Remember, if it's been given on 1st, then the data has to be rejected by 6th. Before 6th, this data has to be injected into the credit information report. Okay. So it is T plus 5 data, T plus 5 calendar days for the injection of the credit information. Next is if any a user or a customer makes a complaint. Okay, he is not satisfied and he makes a complaint regarding any CIBIL report. It is not correct, this is something is wrong. And if it is not been resolved within 30 calendar days, then from the 31st day, the complainant is eligible for 100 per day compensation. Remember, if it is not resolved within 30 days, then from the 31st day, the complainant is eligible for 100 per calendar day compensation. Okay, so these are the various directions that have been issued by the Reserve Bank of India on the credit information companies. The next news is about GDP forecast. So if you see, the India's GDP is expected to grow by 6.4% in the financial year 25 against 8.2%, and the first advance estimates has been released. So they released first advance estimate, second advance estimate, provisional estimate. So like this, it will be released, and now has released the first advance estimate by the NSO. So the National Statistics Office, which works under the Ministry of Statistics and Program Implementation, has released the first advance estimates of the GDP for the financial year 25. So there's a lot of data in this news. So it's not required to remember each and every data. Just remember the few important ones. So if you see the real GDP data, we know that it was grown 8.2% in the financial year 24, and now it is expected to grow only at 6.4%, which is a 4-year low. And the nominal GDP has grown by 9.6% and is expected to grow by 9.7%. Now, what is the difference between real GDP and nominal GDP? It's the only thing that real GDP, it includes inflation factor within it, but nominal GDP, it does not include the inflation factor. That is the main difference between the nominal GDP and real GDP, and that is why real GDP is always lesser than the nominal GDP. So inflation factor, if you mean that in real GDP calculation, a base year is selected. Say the base year, now the current base year is 2011 and 12, and there is talks going on that to change this base year. So this base year is selected. Okay, this base year is such that it is a year where there is no any severe conditions like geopolitical tension is not there, and there is no any famine, any natural disaster has not occurred. So it is a regular kind of year has been selected as a base year, and the prices of the base year is used for the calculation of the real GDP. Say in 2020 or 2024, the units of production was 100. Okay, and the prices in 2011 and 12 was say 10 rupees. Then the GDP would be 1000 rupees. Okay, this is how the real GDP is calculated by taking the price of 2011 and 12. In case of nominal GDP, the financial 24 units of production is used, but the price here is the price of the 2024 price itself. That is financial 2024 price is being taken. Say it is 20 rupees, then it is 2000. Okay, so if you see, the production of units is the same. The only difference is the price. In real GDP, 2011-12 price is taken, that is the base year price, and in nominal GDP, the current financial year price is taken. That is the only difference between the real GDP and the nominal GDP. And next is the gross value added. The real gross value added, it was 7.2% in financial year 24, and it is expected to reduce to 6.4%. Similarly, in nominal GVA, it was 8.5% and is expected to increase to 9.3%. So what is this gross value added? Say suppose in the making of an ice cream, it is the sugar cane is used and also a sugar is used. So first a sugar cane is procured and that is converted into sugar, and then that sugar is converted into an ice cream. Okay, it is procured for 20 rupees, and then the sugar is after the production of sugar, it costs 50 rupees, and the total final product, that is the ice cream, the cost is 120 rupees. Okay, now if you see the value addition in this part, okay, the gross value added includes the value addition and not the final value of the products. GDP, it includes the final value of the product. So GDP in this case, if you see, it is 120. But if you see the gross value added is here, if you see from 20 to 50, the gross value addition is 30 rupees. 30 rupees of gross value addition has been taken in this step. Okay. In the second process, gross value addition of 70 rupees has been done. In the first step, a gross value addition of 30 rupees, and in the second step, a gross value addition of 70 rupees has been observed. Okay, which means the total gross value added is now 100 rupees. But if you see, GDP is 120 because it is the final product. But gross value added, the value addition in each stage is considered. That is what is gross value addition. Okay. Next is private final consumption expenditure. It is 4% in financial 24 and expected to grow at 7.3% in financial 25. Similarly, government final consumption expenditure has grown at 2.5% in financial 24 and expected to grow at 4.1% in the financial 25. The last one is gross fixed capital formation. It grew at 9% and expected to grow at 6.4%. Gross fixed capital formation is nothing but the capital goods. So capital goods, like if you see machineries, land. So these capital goods are required to produce the economic goods. So if you want a bun or if you want an ice cream, then you need a machine, right? That is the capital good. The capital good formation, if you see, it has grown at 9% in the financial 24, but now it is expected to grow at 6.4% only. So if you look at the trend, if you see, the real GDP has gone down, The gross value added has gone down. And then what else? This gross fixed capital formation has gone down. So remember the trend. Okay, it is not required to remember all the numbers. Remember this number. Real GDP number is very important. Nominal GDP number is also important, and gross value. Real gross value added is also very important. Okay. And one more thing is that remember this trend. The gross fixed capital formation, it has gone down compared to the previous year. So remember the trend for this case. And this is the value, 173 lakh crore real GDP in financial 24, and similarly 184 lakh crore in financial 25, 295 and then 334 in case of nominal GDP, and real GVA is 158 lakh crore, 169 lakh crore, and nominal GVA is 267 lakh crore and 292 lakh crore. So remember the real GDP value or not. This, it was 173 lakh crore and is expected to grow to 184 lakh crore in financial 25. Next is, we know that majorly there are three sectors. One is primary, secondary and tertiary. The primary sector, it is agriculture and allied. So here it is expected to grow at 3.8%, higher than the 1.4% growth observed in financial 24. Similarly, the secondary sector, which includes the electricity, gas, water supply and other utility services on, it is expected to grow at 6.8% compared to 7.5%. The construction segment also, it is expected to grow at 8.6% compared to 9.9%. And the tertiary sector, that is the financial, real estate and professional services, they are also expected to grow at 7.3%, a little lesser than the 8.4% growth observed in financial 24. So if you look at the trend, only the primary sector growth in financial 25 is going to outpace the growth in financial 24. Rest all growth are going to be lesser than the financial 24. So remember the trend, only this sector is going to outpace the previous year's growth, and the rest other two sectors, it is expected to grow lesser than the previous year's growth. Okay.
We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this Static Banking Awareness course lays a foundation to the current banking and finance news. Now, you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the Static Banking Awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course.
The next news is NPCI extends the market cap deadline for the UPI apps till 2026. Now this cap was introduced in order to avoid any monopoly. A single party or a 2 or 3 party should not have a hold on this UPI application. That is why this cap was introduced. If you see currently, The 47 out of the total market share, 47% is held by PhonePe, 37% is by Google Pay, and the rest 15% is held by others. And the others predominantly are Paytm, Navi, and the last one is Cred. So around 15% is mostly held by Paytm, Navi, and Cred. So in order to avoid the monopoly, this cap was introduced. So if you see, the NPCI proposed a 30% market share cap. So if you see, total market share is 100%, means the PhonePe should have market share as only 30%, but now it is holding 47%. So that has to be reduced to 30%. By when? By 2026. That is the latest deadline. But initially, if you see, it was in November 2020. Okay, it was expected to reduce it to 30%, but there was a lot of industry opposition, and due to that, the deadline was extended then. So it was extended to December 2022. Again, it was extended to December 2024 for the same reason, industry opposition, and now latest is again it has been extended to December 2026. So only by December 2026 we'll know that whether the cap of 30% would have been achieved or whether it will be extended again. Next, if you see, the NPCI, it also had initially set a limit on onboarding the customers on the WhatsApp Pay. So if you see, in the WhatsApp application, there will be an option where you can make payment to your contacts. So initially there was a user limit, like how many people can be onboarded on the WhatsApp Pay, that was there. But now if you see, it has been removed. So now if you see, it allows it offers UPI services to over 500 million users in India. So initially it was there was a cap of 1 million on the WhatsApp Pay. Then it was increased to 100 million. That is, the cap was increased to 100 million by 2022. And now if you see, there is no cap. Next is about a memorandum of understanding. So this was signed between Assam and SBI and UBI. So Union Bank of India. Now why was this signed? This was signed to provide insurance benefit to the state government employees. So if you see, there are a lot of benefits that will be provided by this MOU. What are they? It will offer a minimum coverage of 10 lakh for natural death, and also an accidental coverage, minimum accidental coverage of 1 crore. In case of permanent total disability, the coverage will be up to 1 crore. In case of partial disability, the coverage will be up to 80 lakhs. The Chief Minister of Assam is Hemant Biswa Sharma, and the Governor is Lakshman Prasad Acharya. So remember, it is Assam MOU with SBI and UBI for insurance benefits to the state government employees. Next is about a reappointment. So if you see, RBI has reappointed Anup Kumar Sinha as the non-executive chairman of Bandhan Bank. Remember, Anup Kumar Sinha, non-executive chairman of Bandhan Bank for a period from January 7, 2025 to July 4, 2026. Two things you have to remember here. Anup Kumar Sinha, non-executive chairman of Bandhan Bank. Next is SBI has launched two products. One is an FD product and another one is an RD product. So if you see, this RD product, it is Har Ghar Lakpati RD scheme. So from the name itself, you can tell that they are planning to enable the customers to earn or to accumulate 1 lakh. Okay, from the name itself, you can guess that Har Ghar Lakpati RD scheme. So that is one thing, and also minors can also open this RD account, and the deposit period is from 3 to 10 years. These are the features of this RD scheme. Next is SBI Patrons FD Deposit. This is exclusively for the super seniors, that is senior citizens who are aged more than 80 years and above, and here they will be offered an interest rate which will be more than 10 basis point of the existing interest rate given to the senior citizen. Suppose the senior citizens have been given 7.5 interest rate, then under this scheme, the super senior citizens will be given 7.6%. Next is SBI launched tab-based online NRO and NRE account facility. So via the tab itself, you can open the NRE and NRO account digitally. So this initiative, it was inaugurated by CS Setty, chairman of SBI, and also it is available across SBI branches in India and select foreign offices. So what are the various advantages of this? It is real-time account activation. You don't have to produce any physical documents, so eliminates the need for physical documentation. So instead, all these documents will be verified and checked digitally. So due to digital process involved, the activation also quite faster with minimum delays. Last one is that it's very convenient and efficient because of the usage of digital tools. Next is Mumbai-based Cosmia Financial Holdings Private Limited. It has got approval by the SEBI to sponsor a mutual fund. So this CFH will invest 200 crores in its asset management company focusing on quant and smart beta strategy. Remember here it is CFH that has got approval to launch mutual fund business. Here it will focus on quant and smart beta strategy. So if you see quant here, it will employ a lot of complex technologies and algorithms and heavy data analysis in order to make investment decisions. So instead of relying on human intelligence, it will rely more on the algorithm, data analysis and all to make investment decisions. The quant strategies use mathematical models, algorithms and data analysis to make investment decisions instead of relying on human judgment. And here this smart beta strategy, it employs both active and passive investing. So smart beta investing is an investment strategy that combines both active and passive investing to achieve high returns, lower the risk and also for diversification. Next is SBI Life acquires 10% stake in the Bima Sugam India Federation. So what is this Bima Sugam Indian Federation? It is a not-for-profit company. It is an unlisted company. It is a digital marketplace for providing insurance products and services. So if you see, Bima Sugam India Federation, unlisted company, not-for-profit entity that aims to create a digital marketplace for the insurance products and services in India. So all the insurance products and services of various companies will be available in this Bima Sugam India Federation. So recently, SBI has acquired 10% in this Bima Sugam Federation. It had bought 66 lakh shares worth of each face value of 10 rupees. So total amount involved here is 6.6 crores. So 66 lakh shares have been bought, face value of 10 rupees each. The total amount involved here is 6.6 crores. Remember, SBI Life acquired 10% stake in the Bima Sugam India Federation. The next news is RBI approves the merger of National Co-operative Bank and Cosmos Co-operative Bank. Now, if you see the 12 branches in Bengaluru and 1 branch in Mysore of the National Co-operative Bank will operate as the branches of Cosmos Co-operative Bank. In financial 24, if you see, the Cosmos Bank had merged with the Mumbai-based Maratha Sahakari Bank and the Sahabo Deshmukh Sahakari Bank. Remember, in financial 24, the Cosmos Bank merged with the Maratha Sahakari Bank and the Sahebro Deshmukh Sahakari Bank. And also in July 2023, RBI imposed certain restrictions on National Cooperative Bank. That is, that maximum withdrawal that can be done by a person is rupees 50,000 per account. So this kind of restriction was imposed in July 2023 on the National Cooperative Bank, and it also further got extended until Jan 24, 2025. Next is RBI grants approval to the HDFC Bank for 9.5% stake in AU Small Finance Bank, Kotak Mahindra Bank and Capital Small Finance Bank Limited. So here in these banks, HDFC can purchase up to 9.5% stake. So this approval is, if you see, it is valid for a period of 1 year expiring on January 2026. So this is not only for the HDFC Bank but for the entire HDFC group companies, that is the mutual fund, life insurance, Ergo General Insurance, HDFC Securities and HDFC Pension Management. So all these companies, they can have up to 9.5% stake in AU Small Finance Bank, Kotak Mahindra Bank and Capital Small Finance Bank each. Next is that RBI had released the interest rate for the floating rate savings bond. So this floating rate savings bond interest rate, it is valid for the period from January 1st to June 30, 2025. The interest rate here is 8.05%. It comprises of the national savings certificate rate of 7.7% and an additional spread of 0.35%. So if you see, the rate of this bond depends upon the national savings certificate. So this interest rate, it is not fixed. It is adjusted semi-annually based on the interest rate of the national savings certificate. Let us look into the features of this bond. So if you see, the interest earned on this is taxable, and if the interest earned in an annual year is more than 10,000, then a TDS have to be paid. Next is that you can invest minimum of 1000 rupees and multiple of 1000 rupees into this bond, and there is no upper limit on this. And the main thing here to be remembered is that using this bond you can avail loans. So you can give this bond as collateral. You can submit this bond as collateral to the bank and get back loan. This is a very important point. Next is that there is a 7-year lock-in period and it does not allow any early withdrawal except for the senior citizens. That is, except for senior citizens, there is no possibility of early withdrawal in this one, and the lock-in period here is 7 years. In case of the senior citizens also, if they want to make a withdrawal, there is a penalty involved. If you see, the minimum lock-in period is 6 years for the people aged between 16 to 70. This is all for senior citizen only. 5 years for aged between 70 and 80, and 4 years the age between over 80 years. So remember, the lock-in period is different in case of senior citizens. 6 years for 60 to 70, 5 years for 70 to 80, and if they are above 80, then it is 4 years. So these are the features of this floating rate savings bond. It is very important. Remember the main things, that is 7-year lock-in period, and also no early withdrawal except for senior citizens, and a minimum investment 1000 and multiple of 1000, no upper limit. You can also borrow loan pledging this bond, and also the interest earned is taxable. Next is SEBI eases settlement norms for inactive brokerage accounts. So when a client does not buy or sell shares for 30 days, then that account becomes inactive. So when the account becomes inactive, what the broker does is that, like, within 3 working days, they have to send the money, whatever is there in the account, to the customer. This is as per current SEBI's instruction. Until now, this is what has been followed. When there is no transaction, when there is no buy or sell in that account, brokerage account, then it is considered as inactive. Then within 3 working days from that inactive status, they have to transfer the money back to the customer's account. Say suppose Monday is the day where it has completed 30 calendar days of being inactive, then Tuesday, Wednesday, and by Thursday the amount should be transferred to the customer. But now what is that? This has been changed. Instead of returning the funds within 3 working days, now it has been changed that this will be settled on a settlement date as per the monthly cycle. So if you see, currently there is a settlement date for every monthly cycle, for every month. So what the SEBI has told that now you don't have to check whether it has been transferred within 3 working days or not. If the account is inactive, there is a monthly settlement date. In that date, you transfer all the amount whichever has been inactive for 30 working days. So this is kind of making it easy for the brokers. So SEBI eased settlement norms for the brokerage accounts that remain inactive for over 30 calendar days. A brokerage account is considered inactive if the client has not made any trade, that is buying or selling of stocks, for 30 days in a row. Previously, brokers were obligated to identify inactive clients and return their funds within 3 working days. Now, the brokers have to settle the funds of the clients who haven't traded for 30 calendar days on the upcoming settlement days as per the monthly cycles specified in the stock exchange annual calendar. So in this annual calendar, every month a settlement date will be mentioned. On that date, you have to settle this amount. That is the new change. Next is a new platform. A new entity has received the approval to operate as a TReDS platform. So RBI has given approval to the TReDS, India's largest supply chain finance platform, to operate as the TReDS platform. Now, if you see this TReDS, it will operate under the brand name DTX, that is Domestic Trade Exchange. So this TReDS will operate as the DTX as a TReDS platform, and this is the 5th company to get approval to operate as a TReDS platform. The other 4 are Receivables Exchange of India, M1 Exchange, Invoice Mart, and C2FO, that is Collaborative Cash Flow Optimization. Now, what is this TReDS platform? See, there is a seller. Okay. He has sold a product to a buyer. Today is 1st. So he has sold the product on 1st. The buyer has told that I can give you the money only on 30th. So for this 30 days, the seller cannot be without the money, right? Because this and all will act as his margin, as his working capital. So he needs money. So what he does is that he goes to another bank or something. He'll tell the bank person that I will give you this bill, that this is the bill for the product that I have sold to the buyer. So you have this bill. You can collect the money from the buyer after 30 days, but now give me some money. So now what the bank will tell that, okay, the value of this invoice is 100 rupees, I will give you 95 rupees. And after 30 days, the bank will collect the money from the buyer. So this is what is called as the functioning of the TReDS platform. Now let us look into detail. So if you see, first the seller will upload the invoice on the TReDS platform. Now this will be given to the buyer. Buyer will check this invoice and then give the approval. So this invoice will be listed as factoring unit. Remember, this invoice will be listed as factoring unit. Buyer will see this factoring unit, review it, okay, all these details are correct, and he will give the approval. After giving the approval, what will happen is this factory unit will be visible to all the financiers who are available in the TReDS platform. Each financier will quote a price. Say it is 100 rupees. Okay, the invoice value is 100 rupees. Then he might quote 95, 98, 97, 96. So each one will quote one price. Okay, whichever is beneficial for the seller, seller will approve that. So say seller is happy with the 98 price offered by the financier too. He or she will approve this. And now the financier will give this 98 rupees to the seller, and after 30 days, the financier will get the money from the buyer. This is how. So 30th day, the financier will get the money from the buyer. Now apart from, so now if you see the platform, the participants are seller, buyer and financier, and the fourth participant is insurer. So insurer would aid the financiers to hedge default risk. Say suppose after 30th, the buyer does not give money. In that case, it is very important to aid the financier, right? For that purpose, this insurer was recently added as the fourth participant. So if you see this platform, it was launched in 2018, governed by the Payment and Settlement Systems Act 2007. And only MSMEs can participate as sellers in the TReDS. But if you see, corporates, government departments and public sector units and any other entity can participate as buyers. This is a very important thing. Anyone can participate as buyer, but if you see, the sellers can only be MSMEs in TReDS platform. And also, companies are required to have a minimum paid up equity capital of 25 crores to set up a TReDS platform. And also, as per the revised notification, all the companies with turnover of more than 250 crores and all central public sector enterprises, they are required to onboard on the TReDS platform. And they have to complete this process by 31st March 2025. Remember, to set up a TReDS platform, the minimum capital is 25 crores. And if you have a turnover of more than 250 crores, then you have to be part of this TReDS platform. Next is sellers are mandatory required to have been in operation for more than a year to participate. So if you want to get into this TReDS platform as a seller, then you should be in operation for 1 year. Say suppose you have opened an entity right now, and after 1 month itself, if you want to be part of this TReDS platform, then you cannot be part of it. Okay, so minimum 1 year operation is required. Only then you can be part of this TReDS platform. Next news is White Oak Capital Mutual Fund unveils India's first actively managed quality factor theme fund. Remember, White Oak Capital Mutual Fund has unveiled India's first actively managed quality factor theme fund. This quality factor theme fund will invest on companies with robust fundamentals that demonstrate the potential for constant earnings and resilience. That is what this quality factor theme fund will have as the objective. Next is that for lump sum purchase, if you see, a minimum of 500 is required, and for SIP, a minimum of 100 rupees is sufficient. Either it can be a weekly, fortnight or monthly basis. And minimum of 6-month installments is required. Okay, lump purchase 500, SIP minimum 100 and minimum 6-month installments. Next is about Exim Bank. So Exim Bank had raised $1 billion by issuing a 10-year bond in the US market. So this is $1 billion has been raised in the US market by the Exim Bank by issuing a 10-year bond. So if you see this Yes Bank, it makes the milestone because it becomes the first Indian organization to issue dollar bonds in 2025. So remember, $1 billion has been raised by Exim Bank through issuing 10-year bond.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Apart from this, you can contact us directly on 9677333862 regarding any courses that we offer or regarding any payment issues. You can contact on directly on this number. Thank you.